Hello everyone, we are Group 5 and we will discuss about Chapter 5 which is double entry bookkeeping for a service provider. Accounting Information System. Accounting Information System is a formal process for collecting data, processing the data into information, and distributing the information to users. The purpose of an accounting information system is to collect, store, and process financial and accounting data and produce informational reports that managers or other interested parties can use to make business decisions. So, yung accounting information system po, ito yung isang formal na process sa pagkuha ng data at pagpaprocess ng mga data into informations at pagpapadala ng information sa mga users. Yung purpose naman po nito is magkolekta at magtago or magtabi at magprocess ng mga financial accounting data at magproduce ng mga informational reports na pwedeng kailanganin sa mga business decisions ng mga managers. Accounting Information System chart has input, processing, and output. Ang input ay business transactions na naglalaman ng phase 1 which is the transaction. Ang phase 1 ay gumagamit ng mga devices gaya ng pen, pencil, keyboard, scanners, at reader ng barcodes. Next is processing phase 2 which is analyzing, measuring, and recording. Ang function naman ng processing sa phase 2 is to analyze yung mga effect ng business transactions sa mga assets, liabilities, owner's equity, revenues, at mga gastos. Yung phase 2 is kumukolekta at nag-gather at sumusukat at nagre-record din ng accounting data na ilalagay sa journal. Next is phase 3 which is classifying, storing, and summarizing. Yung phase 3 naman, ito yung nag-gather ng data at inorganize ito sa pagkakapareho nito at nilalagay sa tinatawag na ledger. And then the last one is output, phase 4 which is reporting, interpreting, and decision making. Ito naman yung nakaayos na data at nagiging meaningful na informations pag na-summarize ang mga ito at nire-report ang mga data na to bilang isang financial statement sa phase 4.
Let's proceed to the T account. T account is the graphical representation of a general ledger that records a business transaction. It resembles the letter T and is convenient to use as it has two sides. The left side and the right side where the increases and decreases are separately placed. At the center of T account is the name of title of the account. Example is cash, account receivable, like that. In accounting naman, the left side is called the debit side and the right side is called the credit side. And kung gusto niyo naman madali or para madaling kabisaduhin, we will call debit to the left and credit to the right. Debits and credits. Debit means the increase of terms of asset and expenses and decrease in terms of liability, capital, and income, while credit means the increase in terms of liability, capital, and income, and decrease in terms of asset and expenses. Always remember that debit is to the left and credit is to the right. When we say asset and it is on the debit side, means that it increased the asset or tumaas or nadagdagan yung mga bagay na pag-aari mo. While it's on the credit side, that means nabawasan yung asset mo. Yung expenses naman, kapag it's on the debit side, it means that nadagdagan yung mga gastusin mo like rent expense, utilities expense, and pag nasa credit side naman, means nabawasan yung mga gastusin mo or nakapagbayad ka ng mga expenses mo. When we say liability naman, it increase on the credit side because that means bumili ka ng mga bagay para sa business mo gamit account mo. While it's on the debit side, it means it decrease by pag nabayaran mo na yung utang mo. While equity is increased by, it's on the credit side because if the account is giving benefit, while it's on the debit side kapag yung account is nagre-receive ng mga benefit. And last is the revenue. Revenue is if it's on the credit side, it costs owner's equity, and it's decreased by it's on the debit side since you gain an or you earn a money or income. Another example is purchase of machine by cash. When it's in the debit side, means increase in asset, while it's on the credit side, it means decrease in asset. That was the Venetian model means. Nabawasan man yung cash mo, may nadagdag naman sa yung asset or the machine. Let's talk about the account balances. It is the total amount of money that is currently in your account, including any pending transaction. For example, when you log into an online banking account, the first thing you will see is your account balance. And account balance is the amount of funds you have available in a financial account, such as checking or saving account. The given balance reflects the net amount able after credit and debits. That's all. Normal balance. Normal balance is the expectation that a particular type of account will have either a debit or a credit balance based on its classification within the chart of accounts. Yung simple guide daw natin sa normal balance is yung how to increase or the account or paano dinadagdagan ang account. Kapag nasa debit side daw, yung asset is expenses. And when you say credit side, ito yung mga income, owner's equity, tsaka yung liabilities or yung utang. So, magiging normal balance siya kapag yung asset is on the debit side, the liabilities on the credit side, and the owner's equity is on the credit side as well.
Accounting cycle. Accounting cycle is the holistic process of recording and processing all financial transactions of a company, from when the transactions occurs to its representation on the financial statements to closing the accounts. One of the main duties of bookkeeper is to keep track of the full accounting cycle from the start to finish. The cycle repeats itself every fiscal year as long as a company remains in business. Yung accounting cycle, ito yung pag-process sa pagre-record at pag-process ng lahat ng transactions ng financial ng kumpanya. Mula transactions hanggang sa pag-present ng financial statements at pagsasara ng mga accounts. Isa sa mga mahalagang duty ng bookkeeper ay mapanatili ang track ng full accounting cycle mula umpisa hanggang huli. Tapos yung cycle naman is nauulit every fiscal year hanggat nasa business industry yung kumpanya. So, we have first 4 steps of accounting cycle. The first one is identify and analyze transactions. Ito yung pag-identify at pag-aaral sa mga transactions. The second one is record transactions to journal. Ito yung pag-note or pag-record ng mga transactions sa journal. The third one is post-journal information to ledger. Ito naman yung paghahanda ng journal sa paggawa at pag-process ng ledger. And the fourth one is prepare an adjusted trial balance. Ito naman yung pagpe-prepare ng hindi adjusted na trial balance.
Business papers. In addition to the given fact that for most businesses it is a legal requirement, there are innumerable other benefits to be gained by keeping accurate accounting records and financial statements. It helps you in better management of your business. Accurate records streamline growth strategies. They also assist you in keeping your operations organized. Having proper financial records help avoid monetary conflicts with suppliers and customers, and also help in easier preparation of management account. So, ang business papers, ito yung mga documents na may kaugnayan pagdating sa business transactions. Mahalaga ito dahil madali natin ditong na isa sa ayos yung pagre-record ng mga finances ng business. At kagaya nga ng sinabi kanina pag in case na maka-encounter tayo ng monetary conflict sa mga suppliers and customers natin, meron tayong maipapakita na mga proof or ng mga records dun sa transactions na nangyari. At nakakatulong din ito sa atin para mas madali nating mapag-aralan kung nag-grow ba yung business natin. Mamomonitor din natin dito kung kumikita ka ba or nalulugi na ba yung business na itinayo mo. Invoice. An invoice is a payment request sent by the supplier that lists the goods or services provided to the buyer. It should also have a unique invoice number as well as the date of invoice. The seller's contact information is usually included on the invoice, as well the invoice recipient. So, ang invoice ay nare-receive ng customer kapag nag-purchase siya ng goods or the services is already given. Yung invoice, parang yung way niya is nakikipag-communicate tayo to buy or to sell a product. Halimbawa, 'di ba yung mga online seller, lagi nila sinasabi na ready na po yung orders nyo, nai-invoice ko na rin po sa inyo. Means, nagre-request na sila ng payment dun sa order and ready to deliver na yung product. In short, yung invoice ay ibinibigay sa customer kapag nagre-request na ng payment si seller. Official receipts. Official receipts are required by anyone in business, otherwise they could not claim back the money spent, and they would end up paying more tax or VAT. Official receipts also show how much is being spent and on what, so the company can show to officials who require them for auditing purposes, and for the businesses to work out their loss or profits. Receipts written on bits of paper can be written by anyone, so they are not included in any audit. So, ang official receipts naman ito ay required talaga sa lahat ng kahit anong business. Dahil lahat ng may legal na business ay merong binabayaran tax, malaki man yan o maliit, no? So, yung official receipt ay hinahanap sa kanila kapag magbabayad na sila ng tax. Ang official receipt ay nare-receive ng customer kapag nakapagbayad na sila sa na-render na services or may binili sa seller. Example ay pag magbabayad tayo ng water bill, 'di ba? binibigyan tayo ng resibo after natin makapagbayad. In short, yung official receipt ay natatanggap ni customer kapag nakapagbayad na siya ng cash. Cash voucher or check voucher. A cash voucher is a standard form used to document a petty cash payment when someone wants to withdraw a cash from the petty cash fund. That person fills out the cash voucher to indicate the reason for the withdrawal and receives cash from the petty cash custodian in exchange. So, ang cash or check voucher ay kailangan maglagay ng reason dun sa cheque para makapag-withdraw ka ng pera. Dahil kung walang reason na nakalagay dun, di mo makukuha yung cash sa bangko. Halimbawa, bibili ako ng jewelry, ng necklace, tas wala pala akong cash sa wallet ko. So, ang second option ko is mag-fill out sa cash voucher or check voucher. Ilalagay ko lang doon yung amount at reason ko, then signature, para ma-check out nila yung bayad ko. Check. It is a document ordering a bank to pay a sum of money from one person's account to another person or to another person's account. So, check is a valid document kung saan pwede natin ito magamit sa pakikipag-negotiate substitute for a cash. Ito ay isang papel na nag-i-instruct sa bangko na mag-release ng pera sa nakalagay na halaga dun sa cheque. Para siyang isang permission slip na ibinibigay ng isang taong may pera sa bangko para mas mapadali yung pag-process ng pagbabayad or pagbibigay ng pera. No need to count na kasi isusulat na lang yung amount. For example, ako, may kakilala ako na nakasalubong ko or na kailangan ko na siyang bayaran or kailangan kong bigyan ng pera. Tapos wala akong dalang cash. So, gagawin ko, isusulat ko na lang dun sa cheque yung amount at pepermahan. Tapos yun na yung iabot ko dun sa taong yun. Para ako nagbibigay ng permiso sa bangko para bigyan ng pera yung tao na yun. Through my bank account. Pwede yun makuha ng cash or pwede rin naman siyang yung account to account transfer. Promissory note. A financial instrument that contains a written promise by one party to pay another party the note's pay a definite sum of money either on demand or at a specified future date. So, ang promissory note ay isang kasulatan o napagkasundoang pagbabayad sa ipinangakong petsa between the debtor and creditor. Halimbawa, di nakapagbayad ngayon yung pinautang mo, which is ngayon yung date ng bayaran nyo. So, si creditor, maggagawa siya o mag-i-issue siya ng promissory note kung saan permado nyo yun parehas at nakalagay dun yung sure nyo ng date kung kailan siya magbabayad. O kaya naman ay nakalagay dun na within this month or bago matapos yung taon, makakapagbayad na siya. Yung letter na yun, o yung written promise na yun, ay di yun pwedeng mabaliwala dahil permado at parehas nyong napagkasunduan yun. Statement of account. It is a bill presented to customer for service rendered and merchandise given for which payment is demandable. Ang statement of account naman ay isa itong detailed transactions between you and your customer. Recorded statement to ng binayaran mo or hinuhulugan mo. Makikita mo rito yung kung yung kabuang bayarin mo, yung nabayad mo na, at yung mga balances mo pa hanggang sa mabayaran mo yun ng buo in a given specific time period. Dahil dito sa statement of account, mas namamonitor natin yung mga transactions na nangyari.
Chart of Accounts. A chart of accounts is a financial organizational tool that provides a complete listing of every account in an accounting system. An account is a unique record for each type of asset, liability, equity, revenue, and expenses. A COA, which lists the names of the accounts that a company has identified and made available for recording transactions in its general ledger, establishes the level of detail tracked in a record-keeping system. Typically, a COA contains the account's names, brief descriptions, and identification codes. Chart of accounts. From the name, you can interpret what it says. It says that it is the chart of the various accounts the business has. The four main types of accounts are asset, expense, liability, and revenue. For example, for a gym, following will be its accounts. First is asset, which has gym equipments, AC, gym premise, cash on hand, and etc. Second is the expense, rent expense for the premise, salary and bonus expense of its personal trainers and cleaners and admin staff. Third is revenue, the money the gym makes from its members and its services, sauna, swimming pool, etc. Last is liability. If the gym has taken a bank loan, the bank loan comes under the liability. The journal. The general journal is part of the accounting record-keeping system. When an event occurs that must be recorded, it is called transaction and may be recorded in a specialty journal or in the general journal. The journal is a listing of entries to be posted to the accounts of the business, which typically includes general ledger accounts and other accounts such as income and expense. Creating that list is the first step to posting the ledgers. Ledgers posting may be undertaken later on the same day or later. The journal consists of raw accounting entries that record business transactions in sequential order by date. The general journal is where the data is first recorded, and each page of the article contains a date, serial number, and a debit or credit record. Some organizations keep specialized journals, such as purchase journals or sales journals, that only record specific types of transactions. The ledger is a company's main account of accounting records, a complete record of all financial transactions over the life of an entity. It is used to sort and store balance sheet and income statement transactions. This can be done automatically with accounting software or by manually compiling financial statements from the information in a trial balance, which is a summarization of the ending balances in the general ledger. Examples of general ledger accounts include the asset accounts such as cash, accounts receivable, debitors account, inventory, investments, land, and equipment, and liability accounts such as accounts payable, creditors account, accrued expenses payable, etc. Recording of entries from journal entries to ledger account is said as posting in ledgers. After posting each and every transaction in all the respective ledgers, it should be tallied. After postings of transactions in ledger, next step is to prepare trial balance report and further financial accounts and statements. Trial balance. Trial balance is a list of all debit balances and credit balances in the general ledger. The totals we agree and ensures that all accounts had been taken for accounting and arithmetical accuracy is ensured. The detail of transactions is entered into the general ledger daily, weekly, or monthly, depending on the company's accounting system, and at the end of the reporting period, a trial balance is prepared. This trial balance summarizes all asset and liability accounts, as well as all equity accounts used to prepare a balance sheet and income statement. For example, a debit could have been entered in the wrong account, which means that the debit total is correct, though one underlying account balance is too low and other balance is too high. And another example for this is an accounts payable clerk records a $100 supplier invoice with a debit to supplies expense and a $100 credit to the accounts payable liability account. The debit should have been to the utilities expense account. The trial balance will still show that the total amount of debits equals to the total number of the credits. The next one is control accounts and subsidiary ledgers. Control accounts are usually multiple work packages that contain some type of scope and cost, and a subsidiary ledger provides more information on a particular item that affect assets, liabilities, or stockholders' equity. This is usually necessary when a company deals with a large number of customers or clients central to its operations. As we all know that a control account is also a general ledger balance sheet account that reports the total value of a subsidiary ledger. See, some ledger accounts need more detailed reporting than others. For example, when the cash at bank account reports the total in the balance sheet, no one feels the need to do further investigation into what goes to make up this figure. But the total of the accounts receivable account in the balance sheet begs the question, who are all the people who owe us money and how much do each of them owe us? For the subsidiary ledger, provides more information on a particular item that affects assets, liabilities, or stockholders' equity. This is usually necessary when a company deals with a large number of customers or clients central to its operations. An example for this is a large company may have so many accounts receivables from a multitude or different customers that it becomes necessary to further categorize its receivables by customer. There will be a subsidiary ledger per A&R company, A is a subsidiary ledger for the A&R of the company, and B, both the following under the umbrella of the AR account of the general ledger. Subsidiary ledgers provide more detail on a particular account than general ledger would. Regardless, the totals for both must match. Customer ledger. Customer ledgers list customers with detailed transaction information as well as outstanding balances per customer. Since putting all the various businesses' transactions into one bookkeeping location will be endlessly confusing, companies use separate ledgers devoted to different aspects of their businesses. One of those subsidiary ledgers is the customer ledger, which details all the accounts receivable a company has amassed. This is especially necessary when companies have credit arrangement with their customers, since such arrangements often lead to multiple payments for a single item purchase. Bookkeeping is a necessary task for any company hoping to do effective business. If a company can keep track all the money coming in and going out, it can lead to money being lost and not recovered. In addition, keeping track of all transactions that a company undertakes is necessary when it comes time to pay taxes, since the general ledger can become overstuffed and confusing if all the different transactions are included in a haphazard fashion. Ledgers devoted to specific business branches are necessary. Creditor or supplier ledger. The supplier ledgers consist of all transactions relating to each and every supplier, all invoices raised and paid for from day one. In a typical accounting system, there is only one main accounts payable account in the general ledger. This keeps the ledger clean and organized without being cluttered with multiple accounts. The only problem is, the companies rarely buy goods on account from a single vendor. They need to record multiple accounts to keep track of the money owed to each vendor. That's where the subsidiary ledger system comes into play. The separate subsidiary ledger is set up to track the details of each vendor account, so the general ledger doesn't have to make tens or even hundreds of accounts payable accounts.